Hello my fellow freedom builders and welcome back to the channel. Now before I start today with this little update video, let me just say I usually forget to say this, but remember to subscribe and hit the bell notification so that you get notified when we get up with new videos, because there could be something like, for instance, the swing trading candidates tomorrow that you don't want to miss. So with that said, let's go to, first of all, the update on the swing trading portfolio, a quick look at the economic key figures that are coming out this week, the upcoming week. There's quite a lot to watch. And of course, we'll have a quick look at the earnings season, and I will try to do that in 5 to 7 minutes, all of it. All right, first of all, swing trading portfolio, we are up 4.27%. That is quite okay. It has been a bit of a volatile week. As you can see, we still have a very good Sharpe and Sortino ratio, but I am waiting for a dip in the market and then these Sharpe and Sortino will come down as well. We are still at 0.7% in max drawdown here, and all in all, it looks very good. I am at about half of the overall market, but that doesn't mean too much. We've only been going here for a month and a half or so. So we are still waiting for the first real drawdown in the market to get this leveled out a bit. All right, what do we have? Well, I have sold out some positions. I actually got my second loss here. That was the Tapestry. I sold that for 4.5% loss. That is okay. I have 3 left. That is the Broadcom, the CSCO, and the Capital One Financial. If we just have a quick look at them here, one by one. The Broadcom here. Well, that is following a very nice trend line here, and I'm not planning to sell that yet. Let's see why. It could retrace a bit and then keep bouncing, so who knows, we might sell it with a little profit or wait to take a large profit on it. The Capital One Financials here, we had the earnings, and I kept it over the earnings. That's normally a bit against my policy. And it was bouncing the head against this level up here, so I'll have to wait. I might sell it Monday. Let's see how it reacts again to this level up here, but that is a bit of a subjective decision to be made here. Last one is the CSCO. I mentioned that as a candidate actually also last week, even though I already had it. But there's a far to the next earnings here, and it has broken nicely upwards. There is a large area up here that we should watch for, but right now it seems like it has broken this this area here around the 52-ish here. So let's see if it can continue up. Last week I mentioned the FMX as a good buy candidate for the swing, but it didn't really give me a good green day, so I haven't entered that. So let's just delete that. It's not really relevant anymore. Tomorrow I will come up with some new swing trading candidates from our scanner. All right, next thing, we have the news for the next week. The first couple of days there's not much to look at, but when we are going into Wednesday, we are getting a Fed interest rate decisions. They will probably hike by 25 basis points. I do not agree with that, but then again, I'm not employed by Fed, so let them decide that. We are just trading accordingly. But when we're looking at the FOMC countdown, it does suggest that there's about 2/3 probability that this will be the last hike. So let's see what happens. There could be a single one more this year, but then I think it will be over. All right, going into Thursday here, we get the ECB interest rate decisions also up by 0.25%. That is the forecast. I think they will hike, I don't know, 2 or 3 times more. They are a bit behind the Fed. So, and the inflation is a bit higher in EU. So I think we will get this up at around 5% at least before they start to pause the hikes. Also, of course, we get the continuous jobless claims here Thursday, and we get some quarterly PCE, that's the inflation prices, but the real ones, the one that we should really look for, are coming up Friday, where we get, let's just see here, we have the consumer confidence for Euro area, but then we have the core PCE and PCE here. They are estimated to drop even further. Yeah, I think they will. We have these numbers here. We can also see that the core PCE month over month is forecasted to be 0.2%, which is roughly 2.5% in a year. So that is getting close to the area Fed really like to look at. And Fed do like to look at the PCE a bit more than they do at the CPI. All right, last thing is the earnings seasons. I'll just give you a quick overview. They are 18% of the S&P 500 companies have now reported actual results. An important thing here is 75% of them have reported positive earnings per share surprises, meaning better than estimated. And last quarter, that was the first quarter after the big drop in 22, the first quarter where they really started to surprise, and now they actually keep surprising. 61% of the S&P 500 have reported a positive revenue surprise, so that is actually okay. You can look at for factset.com here and look at Earnings Insight. Then you can get this report where you can see all of the different metrics here. You can see that the net profit margins have actually dropped. They went up a bit in Q1. Now they have gone down again to 11.1%. That is the lowest since Q4 of 2020. So that is something to look for, and in here you can get a lot of different insight. I might make a video one day where I go a bit more in depth. But right now I am mostly interested in the fact that there are a majority of the companies that are having positive earnings surprises. That's all for now. That was a quick look at the portfolio, which is the most important part, and then a bit look at the overall macro and different economic metrics. Until next time, take care of yourself and your money out there. Remember to subscribe and like and all that jazz, and I will talk to you again tomorrow with some swing trading candidates before market opens. That's all for now. Bye.